morning. My name is Richard Wexler, and this is Caring in America, the podcast for caregivers and care recipients. So, folks, the ones that have been listening to me for a long time know who I am, why I'm doing this. 20 years ago, married later, two small kids, and all of a sudden the phone starts ringing, and my wife and I wind up caring for both her parents and both mine. A 14-year journey that went from '05 to 2019 when the last parent passed at 96. Doing a tremendous amount of education over these last 20 years, trying to get people to really understand what it means to age, what it means to need care, and all the ramifications thereof. And now, having launched our national foundation, A Plan to Age, back in January, I am now the CEO of that organization. We have a special guest with us this morning. I'm going to introduce him via a bio. That's Kevin Guttman. He's with C2 Financial. He helps senior homeowners remain in their home and age in place. They get to maintain their independence and entertain the lifestyle that they have dreamed of. They get to retain ownership of title, yet gain access to their home equity. And probably best of all, through the products that he offers, refrain from making a monthly principal and interest mortgage payment. Are you there, Kevin?
Good morning, Richard. Good to see you.
You too. How are you today?
You know, it's summertime, and that's my favorite time of the year, so I'm enjoying life.
So we're doing good. Hopefully it's not too hot where you live. Where I am, it's a pretty warm today, but I think I'll survive. What we want to do, folks, is something a little bit different today. Kevin's specialty, we talked about reverse mortgages. We want to talk about that by doing a little role play. Hopefully I'm a decent actor. I guess we'll find out, and you guys can grade me if I'm good for an Academy Award or if I suck. But I'm going to play a homeowner that gets in touch with Kevin, kind of goes through the scenario of what's happening in my life. And then what I'm looking for him to lead me to is why I should be getting a reverse mortgage and all the benefits thereof. I don't know that as this homeowner, but I think we will eventually get there. Does that make sense, Kevin?
Yeah, absolutely.
So as the phone rings and Kevin picks it up, hey, Kevin, this is Richard. How are you?
Richard, thanks for calling today. How are you doing?
I'm doing really well. I actually got your name from a friend of mine, Julie. I think she worked with you a few years ago, and she said that you might be able to help me in the situation that I'm in. If you don't mind, I'll kind of run you through what's going on in my life.
Yeah, absolutely. Thank you.
So my wife and I live in Denver. We own a home. You know, I am so excited. Actually, next week, I'm making the final payment on this home.
Hey, congratulations.
Thank you. Once that thing clears, no more mortgage. I mean, we've been in this house pushing 30 years now, and I am so excited. So we have this house. We also have a rental home that we own as well. And basically what's going on, we have one granddaughter, Mary. She's the cutest thing in the world. And she just got accepted to college. And it's actually a pretty prestigious school. And so you know what comes with that. It's going to cost a lot.
Right.
So I think she's got a scholarship for part of it, but her grandmother and myself have made a promise to her parents and her that we would help pay for at least part of her tuition, room and board, and so on at the school. And you know, it's in addition to that, and I don't know if I need to bring this up, but I'll say it. My wife has kind of been having some issues as well lately. She really hasn't been walking that well. Mobility's been tough for her, and I'm wondering at some point, and maybe it's sooner than I thought. We may have to bring some help in the house. And part of why I bring that up, I mean, she's home all day, but I'm still working, and I'm probably between my commute and the hours that I'm at the job, I'm probably gone about, oh, I don't know, 10 to 12 hours a day. You know, just Monday through Friday. I'm home on the weekends. And I was talking to a neighbor, and what he was saying to me is maybe we need something like a home equity loan. I don't know. You're the expert, not me. I know there's one thing that I don't want, that thing called a reverse mortgage. I was talking to another neighbor that I've known for eons, and he was telling me he had one like 20, 25 years ago, and he was always scared that the bank was gonna take back his property. So he was kind of warning me about that. One more thing, and I'll let you give me some information. What my wife and I were thinking is this loan that we're going to do, probably putting it on our rental property. Is this something you can help me with, Kevin?
Yeah, those are all great questions. And thank you for taking the time to help me understand your situation. So, there are a couple ways that you can access your equity. One involves a monthly payment and one doesn't. Which one would you prefer, a payment or no payment?
I mean, my wife doesn't work. I'm out there at work, and not, if I could have no payment, that would be awesome.
Okay. So that rules the home equity line of credit out because a home equity line of credit requires a monthly payment. Now, as far as accessing your equity, would you want all the money up front or would you want money available to you throughout the rest of your life?
Probably available. I mean, I got to pay. I don't even know how much her costs are going to be. I know they're substantial, and I don't know how much that care is going to cost if I have to bring someone in the home. Oh, there's one more thing that I didn't mention. I mean, even though my wife's having difficulty moving around, we still want to travel. I'm hoping to retire in the next year or two. We may have to get a wheelchair for her, but we probably want to travel. So I guess in answering your questions, just be able to get our hands on the money when we need it.
And then the house that you and your wife live in now, the one you've been in for, I think you said 30 years, um, how long do you think you're going to stay in that particular home? Because this loan we're going to talk about is only available on your primary residence, not your rental property.
So I can't do it. Oh wow, I can't do it on the rental. I don't want if I want to put another mortgage on the house, but you're saying I can't do it on the rental. Wow.
Do you have a feel for how long you might live in your home?
Well, we love the neighborhood. We love the neighbors. Like I say, we've been here a long time. I mean, it's a one story, so it works well for both of us. Probably a long time.
So, the way a reverse mortgage works is it has to be on your primary home. The responsibilities the homeowner has is to maintain the home, which I'm sure you do. You've lived there for 30 years. Pay the property taxes and insurance on time, which I'm sure you do.
Yes.
And as long as you do that, you can't outlive the loan because the term of the loan is 150 years.
Wow.
And there's really two things that distinguish a reverse mortgage from other mortgages you've had over the years. The first one is there's no payment required. With the mortgage you have now, the one you're about to pay off,
Yeah.
obviously there's a monthly payment. With the reverse mortgage, there's no monthly payment required. The second is you and your wife. What's your wife's name?
Her name is Mary as well.
Yeah. So you're not responsible to pay it back because it's considered a non-recourse loan. What that means is the only recourse the lender has is the sale or refinance of the home after the last of the two of you move out permanently. So you can stay there as long as you want, as long as it's your primary home, you maintain it, you pay the property taxes and insurance on time. You stay on title the whole time, just like the loan you have now. You're on title, there's a lien against the home. Same thing with the reverse mortgage. You're on title, but there's a lien against your home.
But like when I was talking about the neighbor, he's not even with us anymore. He told me he had one of these things 20 or 30 years ago, and he told me he was always scared about the bank taking his home back. I mean, does that happen? Is that true?
So, what's happened over the years, Richard, is well, let me back up. The very first reverse mortgage was taken out in 1961. There was a widow living in Maine, and her husband passed away, and she could no longer afford to make the monthly mortgage payment. She knew the local banker because her husband was a football coach. Banker played football for her husband in high school. So the bank decided to suspend her mortgage payments and to take equity out of to take to pay the interest through equity each month so she could stay in her home and not have a monthly mortgage payment. So the very first reverse mortgage was born, and for 27 years it was not regulated. So until 1988, when President Reagan and Congress passed the Home Equity Conversion Mortgage Bill, it was a 10-year trial bill to see if this would help a senior homeowner age in place, remain at home and age in place, stay on title as an owner, not have a monthly mortgage payment, gain access to their equity. And after 10 years, they made the law permanent. And over time, they've made this program more safe and more secure for seniors.
Wow.
So, to answer your question, this is the safest loan anybody in America can get. There's so many safeguards and protections built into it. It used to be, prior to 1988, that people could lose their homes, and they did lose their homes. There was some unscrupulous players in that space. But the only way somebody can lose their home now is if, like I said, they don't live in it as their primary home or maintain it or pay the property taxes and insurance on time. As long as they do those things, which most homeowners do anyway, they
Sure.
can stay, they can't outlive the loan.
I mean, this almost sounds too good to be true. I mean, the fact that I don't have to make any payments, the fact from what you're telling me, like again, my friend, that was a long time ago, and like I say, I think he's passed. But the fact that this loan has changed that much and it's really safe. And, I'm talking about these different things I want to use with the money, and there are actually maybe some more things that I want to do as well. Does that work? Can I use the money for basically whatever I need or want?
There's one area that you can't use the money for. You can use it any way you want except purchase an annuity. Because in effect, you're already unlocking and annuitizing your equity, either through a lump sum payment or monthly payments to you from your equity, or they can also have a line of credit. Those are the three ways people can access their equity. But let me address your comment about it's too good to be true, because a lot of people say that. It's not too good to be true, but it is too good to be free. These loans are the most expensive loans you can ever get because they do more than the average loan, i.e., no monthly payment, i.e., not have to pay it back, and access your equity tax free. It grows tax free, and you can access it tax free. So, what makes it expensive? Well, these are FHA backed loans for the most part. 90% of the market is FHA, reverse mortgage loans, HECM loans. What makes it expensive is these loans come with mortgage insurance. Upfront mortgage insurance is 2% of the value of the home. So let's just say your house is worth 500,000, for example. That mortgage insurance is $10,000 on top of all the other fees that come with a mortgage. Now, you don't have to pay for that out of pocket. Most people roll it into the cost of the loan. There's only a couple things you pay for out of pocket up front: the credit report, the counseling, and the appraisal. It's about $1,000 out of pocket. The rest of the fees you can roll into the loan if there's enough equity to support it. So we always tell people it's not too good to be true, but it is too good to be free.
Wow. You mentioned the word counseling. What is that?
So with every reverse mortgage, one of the safeguards that the government has built in is people have to do counseling with a third party, an independent third party. We give you a proposal. Inside the proposal, there's a list of different counseling agencies, and people call and set an appointment either in person or by phone, and they go through a 1 hour phone counseling appointment. The purpose of it is several things. One, to make sure the senior homeowner is not being coerced or pressured to do this by anybody, a loan officer, a family member, etc. Two, to make sure they understand the program. Three, to make sure they're of sound mind, they understand what they're doing. And then four, just to be sure that they're comfortable with the parameters of the loan and understanding equity is being charged, I guess you'd say. Interest is being charged against equity every month. Now, Richard, to be fair, people can only borrow 35 to 45% these days with these 40-year high interest rates. So there is almost always equity at the end because they're borrowing such a small amount and they're earning appreciation on 100% of the value. They're paying interest on, less than 45% of the value. So in almost every case, there's money available at the end for the heirs, which is a big concern for most senior homeowners.
Yeah, I want to make sure. I mean, we only have the one son and daughter, but I want to make sure we leave something to them and our grandchild. That's a concern. So, I mean, what you're telling me, Kevin, I mean, I like what I'm hearing. I like the fact that I can access the money. I like the fact there's not going to be any payments. How does the bank get paid back?
Yep, that's a great question. So because these loans are insured, the FHA is guaranteed to get their money back. So let's say, for example, worst case scenario, you and your wife get this or as early as you can, which is 62 for the HECM, 55 for a jumbo reverse mortgage, but we'll say HECM 62. And let's say your home doesn't appreciate. In fact, it's negative. And let's say interest rates remain high. And let's say you pull the money out as soon as you can at the beginning or the first year. And you live in your home longer than the government projects you to live in your home. And as a result of all of these things happening over a long period of time, which is highly unlikely and unusual, but potentially possible, now your home is underwater. So instead of it being worth 500,000, it's worth 450 and you owe 500,000. This is where the mortgage insurance kicks in because no debt can ever be passed on to you because you're not liable to pay it back, your estate, or your heirs. So the mortgage insurance is going to step in and make up that $50,000 shortfall.
Wow. I mean, this sounds this sounds great, and it sounds like what I was actually looking for, even though I didn't know it. You mentioned 62, and I actually just turned 62 last week. I mean, is that a qualifying number or something?
Well, happy birthday, happy belated birthday. Here's the qualifications. At least one borrower needs to be 62.
Okay.
The property type needs to be a single family residence or a townhome or a condominium or a 2 to 4 unit building where the homeowner occupies one of the units. They have to have at least depending upon the age, 55 to 65% equity in the home. They have to have enough income to prove they can pay the charges on the property, the taxes, the insurance, the maintenance, etc. By the way, most people qualify with just their pension or their Social Security because
Wow.
you're not qualifying for a payment.
Right.
And that's pretty much it. That's the qualifications um, for somebody getting a home equity conversion mortgage. HECM. If it's proprietary, $1 million and up home, then both borrowers need to be 55, and we can lend up to 10 million value.
Wow.
The difference with the proprietary and the HECM, FHA-backed reverse mortgages, the proprietary has higher interest rates but lower fees because the proprietary loans don't have mortgage insurance.
Okay. And as far as age, my wife's 59, and now that I'm 62, that's okay, it sounds like.
Yeah, just one of you needs to be 62. Yeah.
And that works. And I still make decent income at my company, so I don't think I'm going to have any problem there. One question I have, my granddaughter is supposed to move in to the dormitory at the school in probably the first part of August, from what I'm hearing. How long does it take to get access to the funds? Because I probably got to make a payment for her within the next month.
The industry average is 45 days. I've worked really hard to streamline the process and make it as efficient as possible and as convenient as possible for people. So my average last year and year to date this year through July is 22 days. So it's about half the time
Oh, wow.
from when somebody applies to we get the clear to close, 22 days.
That'd be awesome. And that would certainly, help me sleep at night knowing that I could make that payment. Because from what I understand, I need to make it before she actually moves in. And I think that's like the first week of August. No, I mean, this is great. I mean, what I probably want to do is just talk to my wife, get back to you. But I'm sold. I'd like to get an application in, however we do that, and make this work for us.
So let me just review the steps so you can talk to your wife about it. We spend about 15 minutes on the phone, get a little bit of information. I create a proposal for you, which has a list of the counselors, and you call and set up an in-person or phone appointment with a counselor, you and your wife. And then you send me about 6 or 7 documents, simple things like driver's license, Medicare card or Social Security card, 2 months of bank statements, either your pay stubs or your Social Security statement. I know you're probably not taking Social Security yet.
Right.
And your W-2 or 1099 for last year. And there's no mortgage because you're paying it off. Then your homeowner's insurance declaration pages. If you live in an HOA, then we need the most current statement. And then if you want to list an alternate contact, we need that too. But that's pretty much it.
Wow.
And then once you finish the counseling, we send your loan to processing. You sign the loan papers to send it into processing. We order the title and the appraisal. And once we get that back, we go through underwriting. And once we get the approval, if there's any conditions to meet, we meet those. And then we send a notary to your home. You sign the loan papers, and then 4 days after you sign your loan funds, and we collect a voided check at closing, so we know which account you want the money to go to if you ever request money. So yeah, it's pretty straightforward actually. I think people get a little freaked out because of some of the history they've read
Right.
about reverse mortgages, but it truly is the safest mortgage somebody can get.
No, this sounds great. And like I say, I'm glad Julie gave me your name. I'm glad I called. This sounds exactly what we need for the different things that we need for the money that we have to get our hands on. So I will talk to my wife. I will give you a call back. I promise I will. We're definitely going to do this. And I thank you, Kevin.
Well, it's great to meet you, and I look forward to hearing back, and let me know if you have any other questions.
Perfect. The end, folks. The end of our little role play. I hope that was helpful as we went through this, and Kevin answered a lot of questions about what a reverse mortgage is, what it isn't, how safe it is, how it works, how fast you can get the money, the fact you can use the money as Richard wanted to for a lot of different projects that he's working on. Thoughts, Kevin?
Well, that was actually pretty realistic of how a conversation goes. I always say nobody really calls to get a reverse mortgage. They call to get what a reverse mortgage can do for them. In your case, I know it's fictitious, but helping your granddaughter, traveling, maybe even money to help care for your wife, with different things happening as she ages. And those things are actually so common. You would be surprised how typical this conversation was.
Wow. Wow. Well, I thank you. As we get ready to wrap up, if people want to get in touch with you, Kevin, what do you want to give out? Email, phone number, website? Go for it, please.
You can give my phone number and my website. My phone number is 877-251-9709. And my website is reversemortgagerevolution.com. And there's a great consumer guide that I wrote on there that they can download, and has so much great information. I'd really encourage people to download that or go online and read that consumer guide. It's very easy to find right on my website.
Perfect. And I thank you again, folks, and please share this information. I thought it was a great call with all the folks around you. And until we talk again, have yourself an awesome day.